going on, guys? What's going on? Get started here just shortly. What a day. Today definitely has been one of the most interesting days, I gotta say, for quite a while. What is this? That's fine. But welcome in, guys. Today was just one of those shattering type of days here. I kind of came on live here yesterday. I pretty much touched bases about, even though I was leaning towards bullish, I wanted, and this is why I preferenced everything by saying I was cash overnight, is that I wanted to see how the market was pretty much going to end up responding overnight to everything that came out of Powell yesterday. And as we see, everything that Powell said from yesterday's statements, the market didn't like it. It also pretty much implied the fact that, from a sentiment standpoint, that everything has not been pretty much priced in as far as the rate hikes going longer, going higher, and that was pretty much what I got on the back end of what Powell said here today. So even though I was leaning bullish towards the end, towards yesterday, I did anticipate that shorts were going to be piled in towards the end of the day yesterday. I even tweeted that I was looking for more so not as volatile like this, maybe like a little bit of a dip and rip, dip and recovery type of scenario. But that's why I wanted to wait till this morning. I'm glad I didn't swing anything overnight. I stayed cash overnight, and I was able to capitalize on the moves today because I caught that pattern, that early morning pattern here. That's pretty much what you see on my screen right now, is that beautiful little ascending broadening wedge action. And that's exactly what I caught earlier on once we ended up gapping down and I was able to define my trendline support. And once I saw us breaking down off of that trendline support, that's when I knew that we were likely going for this gap fill that you see down here below that 395 half. I was likely implied to say that we're going to go down towards that gap fill. Morning sentiment, and that's why I say, look to see how the morning would have opened, is that we were already bleeding before the market opened. And so that's what I ended up pretty much, given the fact of what the surrounding factors, the surrounding sentiment was this morning. Futures just continuing to tank. We had retail already just dropping behind what the debacle was in Target this morning. That was just literally just setting the tone for everything. Once I saw Target and then I saw the broader market literally just follow behind it, and then couple that with the pattern that I was able to identify earlier on in the morning, that's what pretty much told me the bigger story of how the day was going to end up going. And that's why that scenario flipped from yesterday's price action. It pretty much told me everything I needed to know, is that the day was going to likely be bearish. And from that, obviously, you see the gap fill that was pretty much in sight yet again that I just mentioned. And that's where I was able to pick apart where we were likely headed towards. And so everything else from there pretty much just led one to another. I dropped a bunch of charts on Twitter this morning. You saw a lot of the different charts. I dropped, I think, a bunch of charts also in ideas, and more so, all of them had a lot of downside targets. And that's why I was able to just pick up apart the entire, list of tickers that I was going through, find the different patterns that were presenting itself, find those major daily to weekly levels that I was looking for, and I was able to pick apart that and, able to pretty much scalp those names. So I know that everyone was pretty much looking at Amazon, Tesla, Target, probably the three biggest names that everyone was looking at, along with Apple. And those are the ones that you had the biggest opportunity to maybe capitalize on, just because of the premium and such a wide daily range that it had today. All right. But since bloodbath, you already know what it is. Is it free fall from here? Sammy, I want to say that you're likely going to get some kind of dead cat here, right? I mean, when you have these kind of drastic type of moves, you're going to get somewhat of a retracement. Um, what I would imply that we probably see about 395 here if we were to get the dead cat going into tomorrow. My only concern about that dead cat tomorrow is that we do have jobless claims coming out tomorrow morning. So what could end up happening is that we have somewhat of a dead cat here overnight, and by the time that jobless claims come out, it's already going to be back red. That's my concern right now. So that's why if you're swinging tonight, you try to catch the knife here, saying that you're going to get a rebound. That's not necessarily the case. So I think your upside is very much more limited. So in terms of free fall, I think the downside is favored, but after a 6 point drop, 16-point drop, I wouldn't say the word necessarily free fall because it's likely going to be much more of a slower bleed here from right now until we likely get more of a meaningful bounce. Maybe it'd be on a Friday for that matter. All right. So I think it's left to be seen, but to say it's a free fall after a 16-point drop, you're going to get some kind of retracement at some point in time. Even if we go down another, say 3 to 5 points here on SPY, I would anticipate you get some kind of bounce in which the bounce is the point where I would say more comfortably the term free fall. All right. Because, and I've said this multiple times, I think all my past videos that I've had, I've told everyone, especially in these bear markets, you're gonna have these short-term bear market rallies, but this is not a buy the dip type of market. I've repeatedly said that. This is a short the rip type of market. If you shorted the rip yesterday, you made bank. If you shorted the rip before that, you made bank. And that's exactly the scenario in which we've had just pretty much endlessly right now. But as I mentioned earlier on, I think the market pretty much presented itself earlier on this morning having targets free fall with retail entirely the entire sector just dropping right behind it. That Costco move was insanely crazy, dropping like 60 points. But retail was already been shattered by pre-market. The bearish setup of the ascending broadening wedge action was already there. The gap fill below was already in sight. So everything felt like the puzzle was all there for us to just pretty much at least get to that gap fill you would have assumed by this morning. Now, I'm sure a lot of you sold pretty much early not expecting a 16-point drop. I probably would have said that 392 to 391 would have been likely, the bottom case scenario. That was just who would have knew that it would actually went this far down. And as you saw, you didn't even get a meaningful bounce into the close. All right. But other than that, the market caught hands today. AA, you're absolutely right. Market did not like anything Powell said. It's pretty much as simple as that. The market did not like the fact that Powell said that rate hikes were going to go longer and higher as long as needed. That's literally the phrase that I think catapulted this entire free fall. And I preferenced everything yesterday that I said. I mentioned that I wanted to see how the market was going to react overnight to all the statements that Powell mentioned because we see this typically from FOMC. You usually get the immediate reaction, and then overnight, as the market digests everything that's said from the Feds, that's when you see the true reaction. And was your true reaction. The pump that we got yesterday was not meaningful at all. Obviously, the instant reaction was that the market got what it wanted because we already knew that they're gonna have to do everything possible to keep inflation contained, and that's why you saw the immediate reaction of us still holding green yesterday. But that was not the right reaction because now you're actually seeing that the market is pricing in more higher and longer rate hikes that's to come, and that's basically what the market's doing right now. We're pretty much pricing in all those future rate hikes if that's how the perspective that you want to look at it. All right. But other than that, I think at this point, with everything as oversold as it is right now, there's not much on my watch list right now. We can obviously say that there's likely going to be a lot of bears pretty much watching Tesla here, and as you see, I pretty much mentioned it earlier on this morning. I mentioned that 759, 760 downtrend resistance was pretty much where you wanted to be looking at earlier on this morning. You saw Tesla try to show a little bit of I want to say relative strength earlier on in the morning. We saw that it pretty much popped right up towards the downtrend resistance, but that was ideally your spot, your ideal risk reward in terms of knowing that the market wasn't a defined downtrend earlier on in the morning. Knowing that the fact that this was a downtrend resistance, you're knowing where your identified risk is breaking over the downtrend resistance. That was ideally the spot that you wanted to short with the market pretty much continuing into the red and pretty much escalating. And then at that same time that I saw Tesla showing a little bit of relative strength, at the same time of that, I saw Microsoft and Apple free falling. And that's what told me that Tesla was likely going to end up tapping that downtrend resistance and then free falling. So I mentioned that 759 was the downtrend resistance. 737 was the breakdown point that I was particularly watching. And then the major support level that you saw that I was pretty much mentioning multiple times was 719. That was the major level that I was watching. So where do we go from here? If we do get the dead cat, I likely expect us to pretty much retest that 719 mark. But other than that, if we get over the 719 mark, then it's likely that we go back to 737 if we get a continuation of a retracement from this downfall. Otherwise, 719 is going to be your resistance. And where do we go from there? we basically take out these lows. We take out the lows that we basically had from earlier on, um, basically like last week. All right, and that's what you're gonna pretty much imply. So 719 is your resistance here on Tesla. You risk the 719. You're if it breaks out above 719, you're watching 737, and then if you reject 719 as your resistance, you're basically looking at the lows in which you're likely gonna take out this 679 level on Tesla. All right, and that's how I would pretty much watch for Tesla. Other than that one, the other name that's pretty much also still on high watch is Apple as well. Apple was just that was just disgusting price action today. I really thought that 142 was actually going to hold by the end of the day. That was not the case. I thought SPY was going to hold 393. That was definitely not the case. And that's pretty much how it is that once you get escalation like this to the downside, it's going to be a lot bigger than what you expect. And that's why a lot of you pretty much took profits or no sooner than expected. You can't pretty much guarantee that anything's going to continue to move in the direction you want it. You have to just make sure that you secure your bag. But other than that, watching the continuation down for Apple here, I'm gonna watch this one. I still had a pretty much a big level here, sitting at this 138 high. That was actually your resistance back from December of 2020, and also you see that you pretty much made a solid support and reversal here back from October of 2020 of last year, basically. So I'm gonna look to see if we pretty much tap that 138 high. Below that 138 high, you pretty much see if I zoom in here, you see this beautiful little gap fill here below 137.75, and that's what you would be targeting on this downside. Otherwise, if we get a retracement back to the upside here, the level that I was particularly watching here is this 142 high. You can say roughly that's 172.65 is the mark that I'm watching here. If we get pretty much about a $2 upside, if we get any kind of meaningful reversal back to the upside, and that pretty much includes the dead cat, if you want to say that for that instance. All right. So that's pretty much Apple, Tesla. I think that's pretty much the two primary ones that might actually catch my eyes first. But other than that, you mentioned AMD. Do you say AMD 110 by Friday? I don't know about 110 by Friday. I don't know exactly where you're looking at that. But yeah, I mean, this is pretty much the chart. I never even changed the chart that I had. I think this still pretty much remains as is. I know that the charts that I went through yesterday, I remember I gave you guys the scenario to the upside and the scenario to the downside. My chart has not changed on this at all. That 103 high is pretty much, you want to say tap to 104. That was still my high. I never even changed my chart. I think I mentioned yesterday, if I'm not mistaken, 99 half was pretty much where you want to see this pretty much roll over. And that was pretty much your breakdown point was that 199 half. And you're basically right now into this gap fill. So you're complete the gap fill at 93.91, which is roughly about $2 to the downside here. If you get any kind of bounce tomorrow morning, then you're watching this pretty much 97.40 will be where you want to see this likely hit resistance to come back to the downside. Otherwise, you can stretch this back out up towards 90, 98. 98 low will be where I would say you get some more upside. All right. But that's pretty much what I would say with AMD. If I'm being honest, I really think it's gonna end up filling the gap fill here, and you likely see this pretty much test down towards 92 low. Why do I say 92 low? And I'll draw the line there so you pretty much understand why I say that for and the reason why. If you actually notice, and I'm gonna change the color here so you actually distinguish, right? If I pretty much stretch this out and I expand this chart on AMD here, where did you actually have your support and your breakdown here back from April of this year, from April 21st specifically? You had that breakdown from that 92 low spot. Where did you end up hitting resistance yet again, May 3rd, before you end up getting a nice little breakout? You also had that level act as a level of support between mostly the beginning of May here, before you ended up breaking down convincingly below that 92 low. And where was your breakout yet again on May 13th? Was that same exact spot, broke out, retested right below it before you push north of 103 here. So I'm inclined to say that that's the level that you're going to end up retesting is at 92 low. And that's going to be the line in the sand whether this ends up, kind of holding up through this market volatility or if it ends up flushing under 92 and then you're looking at a more significant gap fill below 88 low that between 88 to what is this 85, so roughly about a $2 gap fill that you're sitting at. if this ends up breaking 92 low. So that's pretty much how I would say that. That would be my analysis. In which case, 92 low is that line in the sand between staying pretty much neutral to bullish on AMD versus this end up being pretty much a bearish setup. All right, and that's how I would look at AMD right now. Other than that, Facebook was another one. This is one that I know everyone's pretty much also been um, on the back of their minds right now. Is when's Facebook going to end up stop bleeding right now? We ended up stopping about halfway through this gap fill right now. I'm inclined to say that we're likely heading towards this gap fill. So where would be the line in the sand for Facebook? It would be 184 high. That would be the level that you're watching for. If we get further downside, you want to see this hold at 184 high. Otherwise, you risk that and you risk coming down towards the completion of the gap fill sitting at 173. So that would basically be about potentially from 184 down to 176. You're looking at about $7 downside potentially, and that gap fill to be completed. And that's how I would look at that. Otherwise, your resistance that you're watching here going tomorrow morning will be this 196. That will be specifically the resistance level that I would watch. Anything if you break out above the 196, then that's likely going to be potentially a nice breakout in which the market would likely be flat to green in best case scenario. All right. But other than that, that's kind of just summing up the names that I was watching. Let me see. You wanted to take a look at Costco? Take a look at Costco. That was just a hell of a drop. I haven't touched this chart in quite a while. I'll be honest with you. I haven't even looked at this chart in quite a while. But I had already had this trend line support pretty much already drawn up. I just never looked back at it. But once this ended up cracking this 521 spot, that was a straight up flush. I had a major support level that I was watching from the breakout dating back to October of last year. But that level literally just went right through the gap fill and that was just a flush. So where do we go from here basically, right? The next major level that I'm watching is particularly right here is the next major level that I'm watching. And that's 38, that's 388. So if that was to be implied here from 430 basically down towards 388, you're looking about roughly another just under 50-point move down towards that 388 mark. And that's what I would pretty much be looking at in terms of downside here. So 388 is that spot that I'm looking at. That pretty much includes where you were testing resistance for most of October up until June of last year. Well, actually, October 2020 to June of last year is where that pretty much lies in terms of resistance. And that's the level that you're likely going to end up retesting 388. And hopefully, this time when you test 388, it's going to act as your support, anchoring off of those October highs, basically. All right. So 380 is my downside here. Otherwise, if you get any kind of meaningful bounce here, and I don't even think there's going to be anything meaningful here, to be honest with you, I think the level that you're likely looking at towards that bounce is 436. So potentially about a $7 upside if we have any kind of bounce into this name here. All right. So 436 is your upside. Otherwise, your downside is still sitting at this 388 level on Costco. Let me see what else. Citi. I haven't looked at Citibank. Let's see what Citibank is doing. I feel like someone actually recommended this name. I think there was somebody who was actually looking at this, if I'm not mistaken. Let's see if I can see where, first thing, where's our identified resistance level? Pretty much sitting at resistance roughly right around here is where I would say is our resistance level. Body of the candle, and that line straight up towards our wick at the end. And this will be where you have your downtrend support level. So this kind of does set up one of my favorite patterns that I think I've mentioned quite a few times is the descending broadening wedge type of action. I do like this one. Now in terms of the pattern, that's kind of where I lie with this one. Um, where do I want to see this pretty much reclaim? I would want to see this end up reclaiming 50. 50.06 is the spot that you're looking for this to reclaim. Otherwise, if you can't reclaim 50.06, then you're risking the entire gap fill down towards 48.08. In which case, with the implied market volatility that's likely to persist, I'm inclined to say that you're going to end up filling this gap to the downside here at 48.08 before you're able to reclaim that spot that I was watching of that 50.08. All right. So I would say you wait for the gap fill down below to end up filling before you look to consider this as a potential buy right now. In which case, that might end up setting you up for a inverted head and shoulders. So if I kind of play that out for you, you have potentially inverted head and shoulders that will play out if this is still able to potentially fill that gap, and then that will be your breakout. So if I change that, you see the white version right there. You see the left shoulder, the head. You fill the gap that creates your steep right shoulder, and then you'll break out of the downtrend resistance. All right. So that's how I would pretty much look at Citigroup AA. Hopefully that kind of gives you an insight. Wait for the gap fill at that 48 mark, particularly 48.07 to be exact. And then from that spot, then you look to end up particularly trying to buy into that one. All right. If I were to say where your stop loss would particularly be, I think your stop loss should be roughly around this 47 half. So your entry point is on upon the gap fill at that 48 flat, and you risk about a 50-cent move to the downside. Because if it ends up dropping 50 cents more, then it's more than likely inclined to say that the market volatility is going to take this down even further than anticipated. And that's why I would say have a tight stop loss. All right. So that's pretty much Citigroup. Other than that, everyone wants to look at the VIX and the UVXY. I mean, we're already in the gap fill. We have a gap fill that's pretty much already being completed on the VIX here. You're gonna complete the gap fill here, 3170. That's gonna be end up being completely filled. I likely expect that to be filled here come tomorrow. Other than that, you have a nice little downtrend resistance that you're sitting at. This is pretty much a beautiful little downtrend resistance. If once you end up smacking over this 33 half, that's when it's gonna likely end up getting even more brutal. I would anticipate that once we see this break 33 half, then 381 on SPY is likely going to be incoming rather quickly. So I would expect even if tomorrow if we get a small more, I want to say small, but uh, more or less volatility than we had today of being a $17 move from SPY. Maybe it'd be a quarter of it to the downside tomorrow. I wouldn't expect such a drastic move out of spot out of the VIX here tomorrow. I would expect us to pretty much chill under this 3350 spot until once we are able to pretty much find you're gonna see a lot of these oversold names get their meaningful bounce, whatever the case may be tomorrow. And then as those names pretty much get their meaningful bounce out of oversold territories, and the market pretty much maybe goes sideways to flat, basically is what I say. Then once we see this pop over 3350 on the VIX, that's when it's gonna get ugly, and we're gonna see SPY likely break that 385, and then we tread down towards 381, which 381 I saw a lot of most of what I saw was the SPY 381 puts, and those were mostly coming in for next week Monday. That's literally what I was seeing most of them. So I'm inclined to say, yeah. I mean, it just depends whether we get the bounce here come tomorrow or Friday. I would expect there to be a bounce here. It just be depending on which case scenario we go. Either we continue to flush down towards 385 tomorrow, and then we see the bounce on Friday, or we end up seeing that small bounce tomorrow and then we flush Friday into Monday. All right. So, but 3350 is the line in the spot for me on the VIX here. And that's pretty much where I think it's going to get scary once you break over 3350. All right. UVXY, I mean, it's pretty much, you're probably looking at more or less the same thing. UVXY, you actually did fill the gap. But in terms of UVXY, the spot that you're particularly looking at here is right around 1950. So I guess similar, pretty much similar scenario. 1950 is that deadly level that I'm watching here on UVXY. You crack 1950, this is gonna get very bloody, more so than what we saw today. All right, so that's why I would say 1950 will be the spot here. VIX is likely 3350, in pretty much correlation to that. All right. But other than that, hopefully I kind of gave you guys a little bit of insight. Let's see how the scenario plays out tomorrow. I think, obviously, the volatility index is up right now after hours. I think SPY was down about $1 and some change. But a lot of things can happen pretty much overnight here. Again, we have the jobless claims tomorrow in the morning here at 8:30. Let's see if they pump us into that jobless claims. Otherwise, maybe we end up flushing into the jobless claims, so we get another quote unquote gap down, and maybe we get some kind of sigh of relief on the back end of the jobless claims, and at some point in midday, maybe they end up flushing us. So, kind of left to be seen. After such a drop down, you have to anticipate that we get some kind of retracement per se. Not, I mean, even if it's a dead cat, um, before we end up coming back down. But 385 is the next level I'm watching. Then 381 is pretty much my major level that I have on watch. All right. So pretty much biggest thing is right now is that if and we get any kind of bounce tomorrow, that's a short. I think that's pretty much what I've been saying every day. Every bounce you get, you short it. Every dip that you get, you short it. I mean, hopefully you're holding a short into the dip because no dip should be bought in this type of market environment. Let's just put that. I mean, that's flat out just reality right now. You should not be buying any kind of potential dips right now in the market unless you are particularly buying long term. I wouldn't want anyone losing money trying to buy, especially weeklies, thinking that this is a dip buy opportunity and you get slaughtered. So that's pretty much hopefully my message right now. If you haven't gotten that message in the past few days, I've been saying it. This is a short the bounce, short the rip type of market, not a buy the dip type of market. So hopefully you guys got that statement out of me. Hopefully I was able to help you guys drop some charts on Twitter, drop charts and ideas. I pretty much gave a lot of downside targets between mostly the tech, as that's usually a focus point. But other than that, let's see what the market gives us tomorrow. Maybe we see Tesla give us a nice bounce up towards that 720-ish mark, 729. And that may end up being a beautiful short, and we could take that right back under 700 because I believe 680 is likely incoming here to test those lows that we had just recently. So that's one that's likely going to end up being big on the watch list. And especially as we close out the week, I know that the premiums are going to be even cheaper, which hopefully those of you with smaller account sizes can take advantage of that. All right. So that's left to be seen. I'll look at Tesla in the morning. I'll hopefully call out some levels and we'll be able to play that off of that one. But other than that, I'll keep it short and sweet. I think we need to digest this move and see how the market wants to play this out. Do we just flush straight down to 385 by morning, or do we get a meaningful bounce that gives us another opportunity to short, potentially for those that want better entries? All right. So I'll leave it at that. We'll kind of call it short and sweet right there. But other than that, I'll see you guys on live tomorrow morning. And hopefully I was able to help you guys out today. All right. But appreciate you guys joining.